I'm Sebastian St. James. Take a look at Amazon's share price today. Is Amazon a buy or a sell? Here is Amazon's chart over the last 3 months. You can see that it was doing fairly well for a little bit, and then in May, massive crash along with the rest of the stock market, and it's basically been rather dismal ever since. That's not very good, is it? A slight rise there in June, but basically nothing to speak of. Let's broaden out to 6 months. It's basically the same again, showing Amazon going steadily sideways, and then of course May, everything's over. Amazon not very good. Or is it? It really depends on how it compares with the rest of the market, because the market overall has gone down and down substantially. So if Amazon has gone down exactly in line with the market, then maybe it's not a problem. We need that comparison. Here is a one-day graph of Amazon. Oh, many more lines. In red, you have Amazon, so you can focus on the bright red. In the green, GSPC, there is the S&P 500, so that's the bottom line. In the teal is the Nasdaq 100. Why Nasdaq 100? Well, this is Amazon. It's a tech stock. If any index it should be directly compared against, it should be the Nasdaq 100. So, as of right now, and this video is right up to date, you will see that Amazon's actually outperformed the S&P 500, which is down the bottom, and in teal, the Nasdaq. Today, Amazon's gone up by 3%, not bad. The Nasdaq 1.4%, and the S&P 500 has gone up 0.8%. So it is an up day on the market, but Amazon has well and truly beaten the indexes. But that's just today. Let's look at the week. Same comparison, we're just spreading it out over the whole week, and we've noticed that 8.5% is the increase of Amazon over the last 5 days, which is amazing. And the S&P 500 has gone up by 3.5%. The Nasdaq is up by 5.1%. So already you can see that the Amazon is much more similarly tied to Nasdaq than it is the S&P 500. So I'm glad we got that comparison in. The jump up in Amazon, which is rather substantial there on the 21st of the 6th, as you can see. After that recovery, it went sideways for a while, and basically today it's decided to continue its journey upwards. So based on today's results and based on the last week, I would say Amazon is doing rather well. But is it? We need a little bit more data. Let's draw back a bit further. Here is Amazon over the last 1 month. Why are the lines fairly blocky? They don't have the same level of detail. That is because it's an interval of 1 day, so the close of business, and before we were looking at intervals of 5 minutes. So over the last month, we see Amazon was actually doing rather well there around June 6th, and then no, it started to come down. But during the whole period, it still outperformed the S&P 500 and the Nasdaq 100. 4.54%. So at least that's a positive. Nasdaq 100 is minus 2.8%, and the S&P 500 overall is 4.48%. So Amazon is winning this month. So far it looks as if Amazon may be going through a bit of a recovery, but I need more data. Show me another graph. This is a 3 months, and boy is it a different performance. Amazon has quite clearly over the last 3 months well and truly underperformed the market as a whole. So that's why we have to keep pulling back to make sense of the data. In May, yes, it's crashed. Everything else did go down. Relative to Amazon, though, the rest of the market basically hardly went down at all. In June, it is true that around about the 3rd or the 7th, Amazon is coming up, but it still has not come up to meet its brethren, the S&P 500 and the Nasdaq 100, nowhere near. So a little bit of a recovery, but not good enough. Over 3 months, Amazon is down 31.81%, the Nasdaq 100 minus 20.18%, and the S&P 500 15.87% down. Over that period, you would have been better off actually holding the market as a whole. So, not looking very good at the moment. It's amazing. Looking at the 1 month graph and down to the week and to today, Amazon looked as if it was doing rather well, but now as we peer back through the history of time, we see Amazon is recovering, but it's so far below the other indexes that, basically it is not a pretty sight. Let's go back even further to the 6th month, and we can see Amazon was slightly actually underperforming. In April, it did actually come right up. It beat the Nasdaq 100, and then, no, it took a massive tumble, and still over the last 6 months, it has not recovered enough to make up for that drop. So terrible over the last 3 and 6 months, but good news now over the last month. Is this recovery enough to impress me? The only way I will know is to compare that against some standards. The moving average is a good one. Let's have a look at that. This is the same graph, but now we've inserted in purple the 50-day moving average. So that's the price of Amazon stock averaged over the last 50 days, and whether Amazon's price goes up through that or down through that, that will tell us whether Amazon is recovering or not. In the purple, we can see the simple moving average moving along quite well at the top of the graph, and around about the 14th, Amazon in red shot up and went through the moving average, the 50-day. So that was a very good sign. It showed that Amazon during that period was recovering quite nicely, but down around about April 13-ish, it plummeted back down, goes in, out through the 50-day moving average, and then, well, May, look at it. It's down, 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 and basically it's been pathetic ever since. And importantly, yes, there has been a slight recovery in the last month or last week, but it has nowhere near gone up through the 50-day moving average of the Amazon stock. Well, this is not good news. So not really much of a recovery if it were the 50-day average, which is a short-term standard. So even over the short term, Amazon has not retraced back up through that moving average. So that is not a good sign. Let's draw back to the 1 year mark. And I've added another moving average. In the blue, the slower moving oscillating line is the 200-day moving average. Why 200? Well, short term, what's happening now is the 50-day. That's kind of the standard. If you want longer period of time, that's a 200-day moving average. And if you're looking for Amazon to recover over a longer period of time, then you want to focus on the 200-day moving average. If you're more interested in the short term, then the 50 is the one to keep your eye on. I'll keep my eye on both. So at the beginning of the graph, Amazon is just darting in and out, which means it's going nowhere. That's how to interpret that. If it's crisscrossing the line, going back and forth, it basically means Amazon is going sideways. In the middle of the graph, no, Amazon goes down and down substantially, underperforms its own moving averages. Up around April, it goes back up. It crosses over both, which is interesting, including the long day 200-day moving average, which is in the blue, but quickly comes back down, flirts a bit with the short-term moving average, and then pathetically goes all the way down and is basically nowhere near it. So over the 1 year period, Amazon is well and truly underperforming its short-term and long-term moving averages and has not remotely started to cross them yet, and that is not a good sign. So my assessment is Amazon is recovering over the last month. This is true, but there's not enough evidence that this recovery will continue, in particular because it has not yet even come up to its short-term moving average. So not much of a recovery yet. For momentum investors, I would say this stock at the moment is not attractive. I have a video coming out shortly analysing Tesla, so make sure you're subscribed so you don't miss out. Amazon has crashed and certainly does not look as if it's really recovering. But crashed is good if you are a value investor. Is Amazon good value at the moment? Let's take a look. Well, here's the value measurements of Amazon. Focus in particular on the PE ratios of 52 and 65. They're rather high. And the price to book at 8.25. We'll be looking at those. But for now, let's look at the PE ratios. Is that a good PE? Is that a cheap stock? I can tell you no, it's not. But here, let me show you the data. To assess whether Amazon is in fact good value or not, we need to look at the S&P 500 PE ratio on average, or on median, even better. So that is at the moment, right up to date, 14.89%. Let's have a look at Amazon's, and no, 52.43, or forward even 65.79. Nowhere near 14.89%. Amazon, you are expensive, expensive, expensive. But what about the price to book ratio? Let's look at that. At the moment, Amazon's price to book is 8.25. Is that good or not? We have to look at the rest of the market. Here is the S&P 500 book to price ratio. You can see the graph where it goes up and down. Right now, the median is 2.8 and the mean is 2.94. So 2.8, keep that in mind. 2.8, 2.8, and Amazon is 8.25. Oh, so Amazon, you are expensive. Yes, you've crashed in your stock price, which is not good for momentum traders, but you're not even a value buy because you're too expensive. So for value investors, not attractive. So I'm just giving you the data as it stands and my opinion of it. Whether you want to buy Amazon or not is entirely up to you. Do your own research. But what about the stock split that I've heard all about? Amazon did a 20-for-1 stock split. The new shares started trading June 6th. So it's all over. The stock split is complete and life has gone on. That's the share price and how Amazon is performing right now. But what about its financials? How are they going? I've done a video on that. Go ahead and click on it now.